Good morning, everyone. Today is Saturday, and in this video, I want to talk about and explain what happened in the prior week and use that as an example to show you how to understand the price action and how price action in the market relates to the market narrative that most retail traders don't understand and don't follow. A lot of books talk about the fact that not only books, but a lot of people say, "Oh, technical doesn't work, fundamental doesn't work, or it works." The uh, uh, the truth is that it's neither. You have to use both tools in conjunction and understand when to use what. Because if it would be just technical stuff like the line breaks and all of that nonsense that you see in the books, everybody would be a gazillionaire by now. So why doesn't it work, and how to avoid being trapped on the retail side of things is this video. This is what this video is all about. So let's take a look. This is S&P 500. You can take a look at any other risk asset, but this is stock market. It's pretty broad, and everybody understands it. You can use the same deal with the Bitcoin or US dollar, which will be in reverse, etc. But for our sake of purposes, we're going to talk about the S&P 500 and what happened this week and how retail traders get completely fucking obliterated. And I'll try to shed some light so you can see what happens so you don't fall in those traps. So the peak here, the previous swing high in S&P was end of March. In sometime in April, I remember when as data was pouring in, a lot of Fed speakers were coming out and basically saying, okay, we're not, we know we said we're going to raise rates by 25 basis points, but actually, due to the data, we're going to be raising it by 50 basis points. And this is what this slide is, the price action sliding. This is the market reflecting the new information that was given to them, and it's getting priced in. Now, the key here is to understand the timing of things. So on Monday, this is Monday, this bar at some point took out this huge, this is daily chart, by the way, not some 5-minute bullshit, a huge support level. And this bar right here, this bar right here was looking like this bar, super bearish. So what happens afterwards? Well, when you see a bar that just is trading below the huge support, there's a liquidity pool here. Liquidity pool is just a bunch of orders sitting because a lot of breakout traders will be trying to short this, and the retail market traders, participants who are late to the party, thinking, "Oh shit, I missed this, I missed this, I missed this." Maybe they were still buying a dip from this rise here, right? And so they're getting stepped out. They're getting stepped out. And finally, all right, fine, I'll join the trend. Screw you, Mr. Market. Fuck you, you know? And what happens is Mr. Market fucks them again. In what way? So they see this bar right here, as this bar. So as a trend continuation, the trend is down, right? We just took out a major support, and everything looks pretty fucking gloomy in the world. But on Monday, I issued to our clients, to even in my free Telegram, I told everybody, and I posted it here. Actually, let's see. S&P trapped shorts. Bullish Tuesday. Bullish Tuesday. Sell it for FOMC. All right. So, and I drew this line, right? This was posted on May 2nd, by the way. So you don't think I'm bullshitting you or something. And boom, this is what happened afterwards. You had that bullish Tuesday. Yeah, then FOMC also bullish, and then we had a brutal turnaround on Thursday and Friday. Now, why did it happen? So first of all, how did I know that this is a trap? Well, because this move right here already reflected the fact that FOMC is is going to be raising rates by 50 basis points. So that information has been primarily priced in. No new data came out to warrant this sell-off and in a continuous manner. And knowing that the next day we're going to have FOMC, it was for professional people who've been around the block and been trading on Wall Street. They understand that people who pushed this took the price all the way from here to here, they had a lot of orders, and they started selling here. They started selling here. They were selling here. Here, they are closing their positions because the next day is FOMC. They're not going to be waiting around. Uh, if you're managing hundreds and hundreds of millions of dollars, you get out when you can get out. You don't get out when there's no liquidity and you're screwed. So they're getting out. And that's why I issued the signal that prior to FOMC, I think we're going to rally. So basically, we priced in the news and then we rallied the rumor and rallied on the news. And that's what happened. So this bar, why did we rally specifically on FOMC day? It was a little bit of dovish message, but most importantly, it was all these people getting stopped out. People who entered those new longs, they're, oh shit, this thing is skyrocketing. Oh my God, I'm going to get wrecked. And they're panicking. So they're covering their shorts. They're covering their shorts, right? And what happens the next day? They're like, all right, fine. Looks like the support has held. Let me go long. And Mr. Market screws them yet again. Now the price turns around and the trend resumes, and they all get stepped out one more time. So and Friday, obviously, we also probed the lows, and we stopped at support at least. So what does it mean? Basically, they got stepped out twice. They got stepped out on this, trying to short this, and then they got stepped out when the price went up. Then they bought here in hopes that how do I know that they bought it here? Don't take my word for it. Is somebody tweet? Retail investors net bought 2.6 billion worth of stocks and exchange traded funds on Thursday. Thursday is this. This was Thursday, and this was Thursday. I'm sorry. They were trying to buy this, so as they were buying, they were getting fucking wrecked. It was the highest level of net buys ever recorded by Vanda. All right, so it's just one point that we get, but it was obvious by the price action itself that these people were hoping in hope of follow through, were buying this at the top, and they were just getting fucking liquidated, and that's what happened. And then the Friday follow through, and now, honestly, so what's next, right? First thing, again, you have to understand the stop. You have to stop thinking like technical now. Oh, the price is down, then we go. You have to understand that all of the price is it's trading of people between people or algorithms, but that psychology is the same. So people with big money, you have to start thinking like big boys. Otherwise, you're always going to be on the wrong side of the market. And if you don't figure out the other participants what they're thinking, you're never gonna be able to be successful in the long run. Simply buying breakouts or fading them is going to work 50-50. That's the thing. It's going to work 50-50. So that's why, otherwise, we would all be gazillionaires, right? There is a breakdown. Let's, let me put my mortgage, my house, and sell everything for a day to short, right? Or some kind of bullish breakout of the trend line. Let me mortgage my child's liver to go long. No, that's stupid. You have to understand what the price is doing via the price action itself, and you have to understand the narrative that the market is giving you. Where are you on the timeline of what the hell is fucking happening in the market, right? So that's what you have to keep in mind to avoid all these traps. Now, so what happens next week is the big question. As you can see, this also another key freebie I'll give you: always wait for candles to close. Always waiting for candle to close, you are saving yourself a lot of trouble, because that's what intraday traders do. They create, like I said, at some point this candle looked like this, and but people who were impatient, they got caught. So always wait for candle to close. Now on come Sunday, Monday open, we there is a very good possibility we can start, because these people got stopped out already. The stops were here. We might push one more time to run tap liquidity here. I think we're gonna have another pullback, and I would be looking for sells around this trend line here. That's my game plan. Honestly, if one second, where's this thing? So highly likely we could tap this, go here, and then trend resume. So that would be the preferable scenario, to completely nail shut the coffin on these people who went long, and hoping that the market will hold. It might hold. I don't know, but we're gonna follow the price action as it starts developing. But this was the brutal context of last week. Understand the narrative that the market is giving you. The Federal Reserve monkeys are coming out every fucking day telling you this, that we're going to be doing this. Don't piss against the Fed. You can't fight it. What's the trend? The trend is down, so stay down. Buy if don't even buy the dip. Sell the rally. Right? See a down bar, sell it. And blindly following just random technical analysis will not yield you great profits. As always, you're more than welcome to stop by apexbull.com. You can stop by our free Telegram group, where I give all this information for free. And you can find me on YouTube and everywhere else, wherever you watch this. Anyway, a lot of stuff is in the description page. Check it. Always welcome new people. All right. Hope it helps. Enjoy the rest of your weekend.